Welcome to the Private Practice Startup, where we inspire you from startup to mastery. We chat with entrepreneurs, experts in the mental health and business arenas, and successful private practitioners to give you the tools needed to make your dream practice a reality. Visit theprivatepracticestartup.com for awesome resources, free trainings, and so much more. Here are your hosts, Dr. Kate Campbell and Katie Lemieux.
Welcome back, Startup Nation, to another episode of the Private Practice Startup Podcast. I am one of your hosts, Katie Lemieux, here with my fantastic and amazing business partner.
Hey, everybody, it's Dr. Kate Campbell.
Last week, we had an awesome show with Lori Eckelberry, where she talked about creating and growing a full-fee private pay intensive outpatient program. So that was a really cool podcast, and really appreciated Lori and everything that she's created, and really the focus on giving back to her staff and self-care and the importance of that. So if you missed that episode, you're definitely going to want to check that out, and especially if you're thinking about creating a program. So she shared some really amazing tips. And so if you are completely new to us, we wanted to welcome you. So a warm welcome. We're rolling out the red carpet figuratively for you, but we hope that you'll stay and become a loyal listener and part of Startup Nation. And because you're a new person to us, we wanted to invite you to grab a hold of a special gift that we have for you. Just head over to our website, privatepracticestartup.com. Head over to the resources tab, and there you'll find the A to Z cheat sheet essentials for building and growing your dream practice. So go ahead and download that. And also, we want to hang out with you on Facebook. That's actually where we hang out, and you get to interact with Kate and I directly, as well as an awesome community of thousands, not hundreds, but thousands of private practitioners across the globe. So head over to Facebook and look for the Private Practice Startup and just ask to be part of our group. And we'll hang out with you there, and happy to support you for creating and fulfilling your dream practice. So we are really excited about our guest today, Craig Cody from Craig Cody and Company. He is a CPA all the way hanging out in New York City. So welcome, Craig.
Oh, thank you very much for having me.
We are really excited, and if you guys know, if you're actually a loyal listener, you know that I love talking about taxes and money. So this is an exciting topic and perfect for this time of year, because we're releasing this podcast right at the beginning of tax season. Tax season, I guess, at the beginning of the year when people are finding their personal, some of their business, and things like that. So he's going to be talking to us today about tax strategies to help private practices lower their tax bills. So make sure you listen up, write down these great, awesome tips, and of course, always visit our show notes.
And we want to take a quick moment to thank our sponsors, Brighter Vision. Perry and his team are just amazing. They build such beautiful websites. They're all WordPress websites, responsive, mobile-friendly, beautifully designed, and they're so collaborative. We've heard such wonderful experiences of our coachees and people that we've referred their way, and also have direct experience with them. So we highly recommend them, and we want to make sure to extend the opportunity. If you guys go to our resources tab on our website, you'll be able to see the top resources that we love and recommend, and look for Brighter Vision, because you'll be able to get their website services for your first month free, and then at a very affordable rate, monthly fee after that.
Free is always great.
Yeah, exactly. Yes. So you can't go wrong with Brighter Vision.
So without further ado, why don't we get started on our podcast for today?
Yeah. So Craig, tell us what led you into the business that you're in now.
Oh, God, this is a bit of a long story, but I'll drill it down a little bit too. This is a second career for me. My first career, I spent 17 years with the New York City Police Department, and at some point I decided I wanted to have a little bit more control over my destiny. I was always into numbers. My first time around in college, I was an economics major, so I decided to go back for accounting. Left the police department, went to work for somebody, an international firm, for a number of years, and then set off on my own, and here we are.
Very cool. And I'm going to guess that you probably have a good following or a great niche working with police officers, yes?
Not really, because
No?
we really deal with business owners, and that was one of the things when I set out on my own. I did not want to have like a big tax preparation practice. I wanted to work with business owners. I wanted to be able to go away during tax season with my family.
I like your thinking. And, you know, as you say that, it really resonates with me. And we always talk about really creating a lifestyle business. I think a lot of times when people get into business is they are thinking solely about the business. And we really invite people to step back and create your lifestyle first. And that's really essential. And I love that you just made that comment and just further supporting, you know, our beliefs in regards to creating business. Very cool.
Thank you.
So could you share with our audience something that you've had to overcome to be where you are today in business?
Oh yeah, I would say 2007 to 2009 was probably, a real tough point in a lot of businesses. And we lost a lot of clients. A lot of clients went out of business, and we had to kind of revamp and decide what we were going to do differently. And basically, we decided to focus on tax planning, and that was going to be our gateway into working with business owners.
Nice. Yeah. And I know before we hit the record button, we were talking with you a little bit earlier about the best advice that you've received, and that might be a good segue to jumping right into our topic. So what is the best advice that you've received that relates to being an entrepreneur?
From an attorney, an estate attorney that I used to deal with, it's all about cash flow. If you get paid in December, you can't eat from January through November. So you need to make sure you have cash flow throughout the year.
Perfect. Yeah, that's a great segue for us to talk about today's podcast, tax strategies to help private practitioners lower their tax bills. So we know you have 10 different tips for our audience today. What's number one?
Well, number one is probably the biggest one is failing to plan. People do research when they're buying a car, buying a house, going on vacation. When it comes to taxes, nobody's doing any research on how can I legally pay less taxes. So failing to plan is the big thing, failing to communicate with their current CPA or accountant.
And I'm also going to guess that this might be one of the tips. So I always talk about, many times, especially in our Facebook group or when we're coaching people, they're always asking like, oh, well, what software should I use? And my recommendation is, what accountant are you using? Because I know that a lot of times people like to kind of save money and do their own accounting and or their own bookkeeping. And my recommendation is, there's a cost up front to have a CPA or accountant, but ultimately, like the name of your book is, they can actually save you thousands of dollars. So I think that's really important for people to really consider in regards to, thinking about an accountant and really forming a relationship with a good accountant. So I'm going to guess that's one of your tips, but I'm not sure.
Yes, it's basically, don't look at your working with your CPA as an expense item. Look at it as an income item, because if you actually communicate with them, you'll uncover planning tips.
That's a really good reframe.
It for sure. It actually sounds kind of sexy. So what? I don't know if that was tip number 2, but what is tip number 2?
Tip number 2 is audit paranoia. People worried about being audited. If the code says you can do it, as long as you're documenting what you're doing it, don't worry about audit paranoia. All right? The people that need to worry about audit paranoia are the people that are doing things wrong.
Our friend and practice building coach, Allison Perrier, actually just got audited recently. And she was saying how it really wasn't a stressful experience for her because she is so organized and she worked closely with her accountant and it all went smoothly. She gave us an update afterwards, and luckily, she was organized and is above board and just a great person. So it went smoothly for her, but that's proof that it does happen. And if you are organized, then you won't have the audit paranoia, right?
That sounds good to me.
Exactly.
How about number 3?
Number 3 is choosing the wrong business entity to operate out of. Are you an LLC? Are you a sole proprietor? Are you an S corporation? Are you a corporation? What's really the best entity for you and your business? And, 2 people can be in the same business, but the entity choice could be different for those 2 people.
Yeah, can you talk a little bit more about that? And interestingly enough, I know actually in the state of California, and I don't know exactly where this comes from, but private practitioners cannot file as an LLC. So are there other states that have similar things like that?
I am not aware of that at all in any state. Typically when you hear stuff like that is, because an LLC is supposed to give you, protection. Mm-hmm. Whereas the LLC as a professional typically doesn't give you protection. And we kind of talk about it really in the realm of the tax world, not on the liability side.
Gotcha. And what are some of the considerations that folks need to make regarding picking the right entity?
Are you doing it full-time? Are you doing it part-time? Do you have another full-time W-2 job, a part-time W-2 job? Do you have employees? How long have you been doing it? What kind of money do you expect to make this year? Are you just starting out? Maybe you want to start out as an LLC and maybe convert at a later point to an LLC taxed as a corporation. There's all these different strategies that you can use, and everybody, based on their set of circumstances, is actually different.
Yeah, and I think this kind of goes back to your first point is failing to plan. And also too, tax season or talking to your accountant really shouldn't be like at the end of the year or the beginning of the year. It should be a consistent conversation. And especially as your business changes, you might predict that maybe you are just going to be part-time for now, and then all of a sudden you find yourself in full-time private practice making really good money. Don't wait until, you know, the end of the year or the beginning of the year to talk to your accountant. It's really important that your accountant is in your corner and really helping you plan to, like you said, Craig, save thousands.
Yes, it's very important. No, communication. You need to communicate.
Yeah. What's your next tip?
Picking the wrong retirement plan or picking no retirement plan. You know, should you put money into a Roth? Should you put money into an IRA? Should you do a 401k? Should you do a self-employed plan? You know, and there's a lot of different, things that go into choosing, which type of plan you want. So, and that takes planning, figuring out what's going on and how you can get your biggest bang for the dollar.
And just out of curiosity, what do you typically find when someone has been a W-2 employee and then they launch their own business, no matter what type of business it is? Do they usually make sure that they're saving for retirement? Is that a question that they're asking first, or is it kind of an afterthought? What is your
It runs the gamut. It kind of depends, I think, on their personality. But a lot of people start with just we're going to do some kind of self-employed pension plan, and we don't have to worry about that until we're ready to file our taxes. And then they realize they can't put as much away as they wanted to put away. If they would have did some planning, maybe they could have put away some more.
And one of the things that I actually learned from my accountant is that you can cap out your retirement by April 15th of the year after, right? So you don't have to put all your retirement in the current years, that you can cap it out if you have some extra or you got a refund. So that's a really good tax tip, and it helps for your retirement, and probably something that many of us just kind of don't know as common knowledge.
Right, and it could actually be the extension date of your return, and sometimes that can make a difference for somebody being able to put more money away. Maybe they're not going to come into that money until June. So if they just put off filing their return and go on an extension, they could actually put more money away and pay less tax.
Exactly, and I love the sound of that. So share with us your next tip.
Okay, number 5 would be missing family employment. Can you hire your spouse? Can you hire your children? Right? Tax court has ruled you can hire your children as young as 7. Now, I like to wait till they're about 11, but they have to do a real job. You have to document what they're doing, and you need to pay them a reasonable wage. So you can't charge $50 an hour for them to lick stamps. But that's a good way to put away about $6,200 a year for your kids, and you could use it for a couple different things. People put them into Roth, or people use it to pay for their private school. So you could actually make your child's private school tax deductible because you're doing it. You're paying them a salary, and then they're not paying tax on the money because they can make up to $6,200, and you're getting a deduction. So there's a lot of different strategies you could use with that.
Or if they keep asking you to buy them like expensive, like electronic items, I guess you could put them to work and they can buy their own.
That's right.
That's so interesting. I haven't heard that before.
Yes. Yeah. That's a nice one.
Wow. So a 7-year-old can earn up to $6,200 a year.
They pretty much anyone can earn up to that and not pay taxes.
Gotcha.
So like when my 3 kids all went to private high school and they worked, the money went into their account, and their school just drafted their account every month. So I effectively got a tax deduction for their school tuition.
So for those of our audience out there who have children and maybe put them in private school, or there's other opportunities here, listen up. This was a really good tip and really important.
Yes. Number 6 would be missing medical benefits. Okay, depending on the type of entity you operate, you could have what we call a medical expense reimbursement plan, which allows you to get a dollar-for-dollar deduction for different medical expenses such as eyeglasses, braces, dental, cosmetic dentistry. So that's a big one. If you have a couple of kids that have braces and they're $7,000, $8,000, $9,000 a pop.
Yeah, that's pretty expensive. And wasn't there something like previously, something about like, I know that medical has changed over the last few years, correct? Like it's like 10% of something.
Well, now it has to be, in order to get a deduction for for a typical medical expense, it has to exceed 10% of your adjusted gross income. So if your adjusted gross is 100, the first 10,000 in medical is non-deductible. But if you have a medical expense reimbursement plan, it all becomes deductible.
That's nice. And how do you have a medical expense reimbursement plan?
You set that up, and depending on the type of entity you have, you set that up. It's a form. You keep in your files, and you're good to go. And there's a small form you have to file every July, and you have to pay $1 per participant.
Okay, and as you're saying that, I kind of think for W-2 folks, usually their company has something like a health savings account or something like that. Is that kind of comparable?
It's actually a little bit better because the amounts could be higher.
Gotcha.
And you could use it in conjunction with a health savings account or instead of a health savings account. So, like I said, everybody's situation is a little bit different. If you're not a W-2 employee, you may not have that.
Right, but what you're saying as a business owner, the possibility of creating something like that through what you're talking about is possible.
Exactly. And, cosmetic dentistry could be really expensive as you get a little bit older. And this is a favorite of clients to actually get a deduction for that money.
Nice. And you just keep reaffirming how working with a CPA and having a really good relationship with your CPA can save you thousands. So
and get your teeth straightened.
That's right.
In the process, right? That's
Yes.
so interesting.
yeah, there's so many benefits.
Oh, yeah, there's a lot. There's a lot of benefits out there. And so let's go to number 7, which is going to sound a little mundane until I take it to the next level, is missing a home office deduction. All right? So do you spend about 14 hours a week working in your home office? Are you doing billing? Are you doing paperwork, emails, whatever? If you meet that requirement, you could take the home office deduction, which may not sound like a big deduction, but it opens the door to having a home athletic facility. And a home athletic facility could be a gym or it could be a pool. And it allows you to write off the cost of operating and depreciating the cost of that pool.
All right, so talk a little bit more on that because you really piqued my interest there because the Private Practice Startup is a completely online company and we often are working out of our homes hours and hours a week. So tell us a little bit more about that.
So you have a home office and it has to be space inside your home that's used exclusively for your home office. So it can't be a spare bedroom or something like that. And then you take the square footage and you divide it by the square footage of your home, and that's your percentage. And let's just say it's 5%. And then you get to deduct 5% of your maintenance on your home, 5% of your utilities, 5% of your real estate taxes, and your interest, which really doesn't have that big of effect. But it opens the door to travel from your home office to maybe another office or to clients. It also allows you to take that, home athletic facility deduction. So those are big things.
Yeah, so what is that?
So that's where the code says basically if you have a home office, you can have this home athletic facility, and it has to be for the use of your employees and their families. And that could be a gym, that could be a pool.
Wow, that's so interesting because we live in Florida. That's where we're
Yes.
based. Even though we're a global company, we have a lot of a Floridian following, and lots of people in Florida have pools and elsewhere too. So that's so interesting.
That is
Yes.
interesting. And so what's also interesting too, especially in the world of private practice clinicians, is over the last few years, e-therapy has really kind of, it advanced, as well as a lot more clinicians are doing that. And my assumption is there's probably a lot of clinicians utilizing their home office to do some type of video or e-therapy. So for those of you who do electronic therapy, you definitely want to listen and consider this if you haven't already. If you have, awesome, but definitely being able to write off a portion of your home office is essential to saving even more money.
Yes, okay. And then we have number 8 is missing your car and truck expenses. Are you deducting, your mileage? Are you depreciating your vehicle? Are you tracking your mileage? Are you driving? Are you using your vehicle for business? So that's a pretty standard one.
What's what do you recommend for the best way of tracking your mileage and car usage?
Well, there's apps. Everyone has to do really what works best for them. The key is most people have a phone and they keep appointments in their phone. So if they ever needed to go back and recreate, they could. But there's a whole bunch of apps out there that you can use that'll track where you're going. I don't recommend any specific one, but it makes it pretty simple.
Okay, great. And what's the next tip?
Missing meals and entertainment. Are you taking potential clients, potential business partners out making sure you're deducting that. It's a pretty standard one. And then the last one is, missing my help or your CPA's help communicating with that person. I kind of use that saying, like, the doctor doesn't call you up and say, how are you feeling today? You need to communicate with him. Well, you need to communicate with your CPA, and you should make sure that he or she is communicating with you.
So just go back to tip number 9, though, because you said meals and entertainment. So maybe focus a little bit on the entertainment stuff.
So entertainment and meals are both deductible to the extent that they're for business purpose, and you get to only write off half of them. So it's kind of like the government says, well, you would have to eat anyway, so that shouldn't be deductible. But if you take somebody out, you get to deduct the cost of their meal.
I read somewhere, I was reading a book about taxes and stuff like that, and it said that the intention of the meal is to talk about and create profit for your business. Is that true, or is it just...
Well, it's all about business. You have to discuss it. It's not supposed to be with your spouse. Okay, that may be a potential business partner or a business partner, but you should be having some kind of a discussion about business.
Gotcha. And how do you suggest that people kind of document or record that? Would the IRS ask specific things?
I've seen them ask, but when you get audited, basically they're going to start with the big things, and the better documented you are, the less they're going to look at little things. How much really, if you deducted $1,000 worth of meals and entertainment, it's not going to generate a whole lot of money for the government. But if you deducted a whole lot of something else that's not really deductible, or they see that you're deducting your grocery bill, that they're going to find a lot of money there.
Gotcha. So if you're deducting entertainment and meals every Friday and Saturday night, might be a red flag.
Yeah, that's a bit of a red flag, yes.
And for me, when I have a meeting with somebody and we're having dinner, or I'm doing something business related that's entertainment, in the entertainment box, I'll actually write on the back of my receipt who I met with, what we talked about, what we discussed, and I'll keep that in my receipt book just in case I was ever audited in the future.
Right. And that's great. The better documented you are, the better off you're going to be.
Nice. So, Craig, would you mind just reviewing your 10 tips again?
Sure. Failing to plan, audit paranoia, choosing the wrong business entity, having the wrong retirement plan or no retirement plan, missing family employment, missing the medical benefits, missing a home office, missing your car and truck expenses, missing your meals and entertainment deduction, and missing your communication with your CPA or accountant.
And the most exciting thing about your 10 tips is actually these 10 tips are straight from your book, 10 Most Expensive Tax Mistakes That Cost Business Owners Thousands. And that's not the most exciting thing, is if you actually go to our show notes page, you'll see that Craig is actually going to not send you a PDF, but he's going to actually mail you a copy of his book. And this is for anyone who actually goes to the show notes page and looks for Craig's giveaway and actually goes ahead and enters their information, and he's going to get his book out to you, right?
Oh, yes, definitely.
That's super exciting. I know I'm going to read it because I love to read tax stuff.
Craig, what do you want to make sure our listeners take away from your message today?
Communication. It's all about communication. You need to communicate with your accountant. It's a two-way street.
Nice. And I know you recommended the book, which you're going to give away, and that's part of your giveaway as well. So we so appreciate you being here on the podcast.
Oh, thank you very much for having me. I appreciate it.
Great. Craig, any final thoughts for our listeners?
Just remember, communicate and plan, and start today. Don't wait until next year.
Thank you. You've been awesome, and I hope that Startup Nation has got a lot of awesome tips, and definitely grab a copy of that book and read it. So Startup Nation, thank you so much for hanging with us today on the podcast. You'll definitely want to tune in to next week's podcast, where we talk with our friend and colleague right here in South Florida, Amanda Patterson. She's going to be talking about the importance of creating a business plan. So check out today's show notes page right on our website, privatepracticestartup.com, and head over to the podcast tab. There you'll find all the resources, giveaway, and links from today's show. If you really enjoyed today's show, let us know how you liked it, and go ahead and review us on iTunes. We hope you guys have an awesome and inspired day, and thanks so much for allowing us to inspire you from startup to mastery.
See you next time, Startup Nation. Thanks for joining us on The Private Practice Startup. Visit theprivatepracticestartup.com for awesome resources, free trainings, attorney-approved private practice paperwork, and so much more.